We now come to the second session on liquidation, starting from chapter 5. Proof of claim. Who shall submit a proof of claim pursuant to a public announcement? A stakeholder shall submit a proof of claim. Claims by operational creditors. What is the form? Schedule 1, Form C. Okay? Sorry, it's Schedule 2, Form C. Because we are here talking about compulsory liquidation, which has 3 schedules. First schedule is auction or private sale. Second schedule is actually the public announcement and everything else. In the second schedule, the first was the consultation with stakeholders. Second was the form of public announcement. Third is operational creditors, which is C. D. What is the format for claims by financial creditors? D. What is the format of claim by workmen and employees? E. What is the format of claim by representatives representing a bunch of workmen and employees? F. What is the format for other stakeholders? It is G. All this of Schedule 2. Proving security interest. How should a secured creditor prove a security interest? With reference to information utility, ROC, security created, central registry under surfacing. Where a person seeks to prove a debt in respect of a bill of exchange, promissory note or other negotiable instrument, what should he do? He has to prove that that bill of exchange, pronote or security which the corporate debtor gave him has to be produced as proof. Substantiation of claims. Can the liquidator ask for a claim to be substantiated? Yes. Who shall bear the cost of proof? The claimant obviously has to bear the cost of proof. Is cost incurred by the liquidator for verification of claim a liquidation cost? Yes, it is. What happens when a claim is false? 2 things happen. You can charge the claimant with some cost. Second, you can refer the claimant to the board. Determination of quantum of claim. Whose responsibility? Liquidator. On a best estimate basis also. Where there is a debt in foreign currency, how do you translate it? It is the exchange rate prevailing on the liquidation commencement date. What exchange rate? It's the official exchange rate as notified by RBI or derived from the RBI rate. What happens to periodical payments? They shall cease. As on the liability for such payments shall cease on the liquidation commencement date. Which means rent, interest and other payments of a periodical nature can be claimed by the concerned creditor only up to the date due amount which is unpaid as at the liquidation commencement date. Debt payable at a future time, already discussed, shall be calculated as x divided by 1 plus r to the power of n, where x is the value of the admitted claim, divided by 1 plus r is the closing yield rate of government securities of maturity date of n on the date of distribution. And n is the period beginning from the liquidation actual date of disbursement to the future date. So it's basically discounting to arrive at the NPV. Mutual credits in set off, are they allowed? Yes. X owes 100 to the corporate debtor. Corporate debtor owes 70 to X. After set off, 30 is payable by X to the corporate debtor. Verification of claims. By when shall the liquidator verify the claims? He shall verify it within 30 days of the last date of submission of the claims. List of stakeholders shall be prepared by the liquidator. And what all will that list contain? It will contain the name of the stakeholder, how much is the claim admitted, what is the security, how much is secured or unsecured, and proofs which have been admitted or rejected in part. When shall he file the list of stakeholders? Within 45 days. To whom? To the adjudicating authority. Can this list of stakeholders be modified? Yes, it can. Based on what? Additional information warranting such modification. Who is the list of stakeholders available to? The persons who submitted the claim. Inspection by partners, members, directors, etc. of the corporate debtor and guarantors, and it shall be displayed on the website of the corporate debtor. So list of stakeholders will be put out in the website of the corporate debtor, all persons who claimed plus members, partners, directors and guarantors. Chapter 6. This is unique to this process. What are the various manners in which a liquidator might sell or dispose an asset? Sell an asset on standalone basis, slump, collective, parcel. Mode of sale. Two modes are there. Auction, private sale. What is the ordinarily preferred mode of sale? Auction. What is the method for all this? Where is it given? In Schedule 1. You can turn up and see. When is a private sale done? When asset is perishable. When the asset is likely to deteriorate in value if not sold immediately. Where the asset is sold at a price which is higher than the reserve price of a failed auction. Prior permission of the adjudicating authority has been obtained for such sale. Or, it is an or condition. So, if adjudicating authority notwithstanding the above, say you can go ahead and sell, you can do a private sale. However, without the prior permission of the adjudicating authority, it becomes an and condition in this case. Perishable, deteriorate in value, higher than the reserve price of a failed auction, or with the permission of the adjudicating authority. However, in these circumstances, it has to be done only with the prior approval of the adjudicating authority, where sale to a related party of the corporate debtor, his related party, or a professional appointed by him. Please note that he can never take it. Related party, his related party, or a professional appointed by him. Liquidator shall not proceed with the sale in what circumstances? Where he feels there's a collusion between buyer, okay, corporate debtor, related parties and the buyer, and the creditors and the buyer. So it's buyer on one side, it's buyer, relatives of the corporate debtor and creditor. If he suspects there is any collusion, he can call the whole process off. What is an asset memorandum? An asset memorandum is a memorandum that lists all the assets as at the liquidation commencement date. How soon should an asset memorandum be prepared? It shall be prepared within 75 days of the liquidation commencement date. Right? Preliminary report is also 75 days. Asset report is also 75 days. Asset memorandum, what all will it contain? Value of the asset as per registered value. Where registered value, and then manner of sale, mode of sale, amount of realization, any other information, and where you are planning to sell it as a set, a parcel or a slump, that value. All this has to be given in the asset memorandum. Shall provide details in respect of each assets other than those referred to in subregulation 2 also. He shall file the asset memorandum along with the preliminary report to the adjudicating authority. So we have to submit preliminary report. We have to submit asset memorandum report. Okay. We have submitted 2 reports till now. And third is every quarter you have to give a progress report. Valuation of assets intended to be sold. See, how should the valuation be done? It should be done by appointing 2 registered valuers. How should they submit a report? Independently to the liquidator. What is the guideline to be followed? International valuation standards have to be followed. What is compulsory? assets of the corporate debtor have to be verified before this report is given. What is the objective of this report? Is to give an estimate of the realizable value of the assets comprised in the liquidation estate. Asset sale report. Now you're given an asset memorandum which basically says this is what I'm intending to get based on my registered valuation. This is going to be my cost. Okay, please be aware this is what I'm going to get, which I will distribute under 53. See, what is happening today is your asset memorandum is giving you how much of assets you are going to have and how much you are likely to realize. Your list of stakeholders is getting ready because that's to be ready within 45 days. It's telling you to whom you have to give this money to. So now you have in the middle an asset sale report, which is the real report. It tells you what is the asset sold, who is it sold to, how much did it realize, what was the cost of realization, who bought the asset. I think I covered that. And if there is a variance between the value that we have realized, which is lesser than the registered value, that also shall be indicated. And the manner and mode of sale. Mode, they talk about private and public auction. Manner, they say standalone, collective, parcel, slump. What happens to a secured creditor in the liquidation process? He can either enforce his security interest or realize his security interest. What is the first thing that a secured creditor who intends to realize his secured interest should do? This is in Regulation 37. He shall intimate the liquidator that he is proposing to do it. What should the liquidator do? He has to respond to him within 21 days, telling him, and what is the information that the secured creditor should give him? He should say, I am planning to realize this security interest for this price. What should the liquidator do? He should respond within 21 days saying that, no, I have another buyer. He will buy it within 30 days. What happens when this is not done? He can go ahead and sell it. What happens when we finally sell to a buyer identified by the liquidator? The cost of that process shall be borne by the secured creditor. That means he has sold it for a higher price than what he thought the secured creditor will realize. What happens then when the secured creditor is only disposing? Then the cost of the process shall be borne by the liquidator. The provisions of this section will not apply where a secured creditor enforces his security interest under SURFACE or RDBA. Distribution of unsold assets. What happens when certain assets are not realizable? The liquidator can, with the permission of the adjudicating authority here, in voluntary liquidation, it's with the permission of the corporate person, he can, with the permission of NCLT, distribute the asset to the stakeholders. Okay? When he is giving a permission application to the adjudicating authority, he has to also identify the asset, provide a value to the asset, detail the manner in which efforts that he has made to sell the asset, and reasons for such distribution. He shall recover the money in a time-bound manner. Same provisions for uncalled capital or unpaid capital contribution. Two things are important. The moment from the time he asks, the contributories have to submit the money, give the money within 15 days. And if a contributory has not given the money, then he is not entitled to any distribution. How should he receive all the money? Can he use the existing bank account? No. He has to open a new bank account saying, bank account of so-and-so company or corporate person in liquidation. Which bank shall he open it with? Scheduled bank. When should he deposit the realization? Within the next working day. How much cash can he maintain? 1 lakh is the cash that he can keep, or higher amount as permitted by the adjudicating authority to meet the cost of liquidation. This is an extra regulation not there in voluntary liquidation. Up to what amount can he pay in cash, or the reverse? When should he do only banking transactions? Above 5,000 rupees of payments. Distribution. Okay, one thing is very important, star this, 42.1. Liquidator cannot commence distribution unless he has given a list of stakeholders to the adjudicating authority. 2. Within 6 months of receipt of the amount, he has to distribute to the stakeholders. Insolvency resolution process costs can be deducted. Any stakeholder who has received any money that he was not entitled to should repay that money. Completion of liquidation. What is the time frame? 2 years. If he fails to do it, he shall make an application to the AA to tell them why it is not over and when he thinks it will be over. What is the final step? 2 final steps. He has to give a final report prior to dissolution. To whom? To the make an account, and he shall make an application for the dissolution to the corporate debtor to the adjudicating authority. See, there we started with board and ROC. So we ended with board and ROC and then went to LCLT. Here we are starting with NCLT itself because there is a liquidation order. So we give the final report also to the NCLT. There he has to submit a final report to the board and ROC also. So, if the liquidation cost exceeds the estimated liquidation cost in the preliminary report, he shall provide the reasons for the same. Unclaimed proceeds, if any, where should he put it? Company's liquidation account. If he is keeping it in his hand, how much interest is he liable to? 12% and such penalty as may be prescribed. If no payment is happening, now if somebody wants to claim from the company's liquidation account, okay, so let me just step back. When he makes a contribution to the company's liquidation account, who shall he give the list to? He shall furnish to the authority with whom the corporate debtor is registered. There we had given a copy to the board and to the ROC. Here it is to whom the corporate debtor is registered, and the liquidator shall be entitled to a receipt from Reserve Bank of India. That is how you will get a proof that all the money has been handed over to the government. A person who wants to claim may apply to the board, okay, asking them to release the money. The board is already having the list with them whose all money has gone into the company's liquidation account. So the board will permit after getting a security from them. Any unpaid amount in the company's liquidation account will be transferred to the general revenue account of the central government within 15 years. Now with this we complete the liquidation process. Now we'll go to what are the schedules. First schedule is the mode of sale. Kindly have a look at this schedule. The important matters of emphasis are: reserve price shall be the value arrived at in accordance with 34, which is registered valuation. Such valuation shall not be more than 6 months old. However, if the auction fails at that price, he can reduce the reserve price up to 75% of the value. After the completion of the sale, the highest bidder shall complete the transaction and give the money, balance sale consideration, within 15 days. Schedule 2, Form A is consultation with stakeholder, B is public notice, 3 is claim by operational creditor, 4 is claim by financial creditor, D is claim by financial creditor, E employee workman, F other stakeholders. No, aggregation of employee and workmen through one authorized representative. G is other stakeholders. Please remember, in voluntary liquidation, this consultation with stakeholder was not there. So it was A, B, C, D, E, F. Here, after A, it is B, C, D, E, F, G, which is all categories starting from public notice to the various types of parties. Schedule 3, speaks about the formats in which books are to be maintained. With this, we conclude the liquidation process regulations also.